Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a big day as the RBI will be announcing its monetary policy decision later today. And what is it that we should expect from the RBI this time? Well, we have with us Lata Venkatesh to take us through the expectations. Lata ma'am, Street is expecting a 25 basis point rate hike this time around, and it is expected to be the last one from the RBI stable. But is it possible that the governor may surprise with a status quo policy?
Well, all votes are divided, and even within the Reserve Bank, one of the MPC members had called a stop at 6% itself. So clearly, even if the Reserve Bank hikes, which of course the majority are expecting, it is going to be a divided vote, with possibly 2 voting against. No, it could be carried by 4-2, perhaps a rate hike. But yes, even the market is divided, but the majority are expecting a hike. And that is why they will closely watch out whether he's giving any signal that it's the last hike, as you said. And therefore, the stance becomes important. If the stance shifts to neutral, the market will believe that, there is a much bigger chance of a pause. But even otherwise, even if they don't change to neutral, they may indicate, that we are at least nearing the end. It's quite possible. But I don't think they will give a very clear indication that it is the end, because, global data is still moving. The only point is that India's inflation is surprising downside, below expectations, mark, at least November and December, and we don't yet have Jan data. As well, by the time they come to the next policy, you will have the third quarter GDP numbers, which is going to be 4.5%. So there'll be political pressure on the RBI not to hike. And so I don't know if all that will add into the statement.
Right, and the FM has already nudged in, not so many words, but already nudged the RBI, saying that the pressure is easing on the central bank to hike rates, given the fact that inflation is, of course, below that 6% mark. What is it that you would be watching out from the commentary?
We will watch out even for liquidity. I mean, quite separate from the rate hikes, the amount of extra money which banks give to RBI because they have, no takers at that price. Though that money is coming down now, but it is still a surplus. Some days 1.5 lakh crore, some days 2 lakh crore, some days it's a deficit. It will move into a definite deficit by the time we come to April. And that is why the market will want RBI to answer whether they will provide money by way of OMOs, open market operations, or any other way. If they are slightly softer, the markets will be happy about it. But if they will insist on the deficit, then markets will take it badly. The word core inflation will be important.
Right.
It is normally not something the MPC is supposed to watch. It's supposed to watch headline inflation. But last time the word core inflation crept into the statement.
Right.
And core inflation is not coming down.
Still above 6%.
Yeah, exactly. So if they insist on core again, it will be taken as hawkish and possibility of more hikes.
Right, so we will be watching out for that. With that, Lata ma'am, thanks a lot for taking out time and running us through the expectations.
We are just running to the Reserve Bank.
Sure, ma'am, I won't hold you up anymore. You can leave for the RBI headquarters. Well, from RBI to the US Fed. In the US markets last night, the stocks closed a volatile session higher as investors digested US Chairman Jerome Powell's comments on inflation and rate hikes. In fact, Fed Chair said that the US is at the early stages of disinflation, and he anticipates to make progress on reaching closer to the inflation target this year. Let's listen into what he had to say.
These are the very early stages of disinflation. So the services sector, really, except for housing services, pardon me, is not really showing any disinflation yet. So our message really was this process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time. The labor market's extraordinarily strong. And by the way, it's good. It's a good thing that inflation has started to come down without it. That has not happened at the cost of a strong labor market. We anticipate, is what we said, that ongoing rate increases will be appropriate. And the reason is we're trying to achieve a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. And we don't think we've achieved that yet. So we said that, and now you see the labor market report, and I think, again, financial conditions are more well aligned with that than they were before. We expect, significant progress on inflation this year, and again, it's our job to produce it. And I want to say again, we throw these numbers around, but the reality is we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
Well, that was the Fed chairman with his comments on inflation and interest rate trajectory. Moving on, well, this morning we're joined by Chandan Taparia of Motilal Oswal to talk about the technicals as well as the levels to watch out for on the Nifty. And of course, he'll also be taking up your queries on specific stocks as well going forward. So if you have any stock-related queries, do send them in to us with the hashtag AskMC and we will have them addressed by Chandan. Well, good morning, Chandan. Good to have you on the show. If you look at the cues coming in from global markets, SGX Nifty is hinting at a positive start. But then again, yesterday as well, we had a positive cues from the SGX Nifty and it was indicating a 100-point gap up for the Nifty. But towards the end of the session, we did fizzle out and it was a pretty volatile session with the markets ending in the negative zone. This morning, we have the RBI policy coming up with the governor's speech at 10 a.m. and what do you expect the Nifty to do today? What are the kind of levels would you be watching out for on the index going forward? And of course, also on the Bank Nifty.
Good morning, Nandita. Thanks for having me. So if you look at the market, I'll just talk about few market internals, which can give us clarity about how the trend will shape out over the next couple of days. The first thing is that even after the budget, the index is forming the higher base. On the budget day, we made low near to 17,353. And after that, market is forming the higher base, including the previous day low of 17,650. Your put call ratio is hovering near to 0.89 to 1. That means put writing is also visible at the lower strike with the view the downside is restricted. India VIX, which has corrected from 19.1 to 14.2 level, so almost corrected by around 20% from higher levels. So decline in the volatility with a stable put call ratio and higher market base indicate that overall positive setup could be there in the market. But yes, due to the call writing at higher strike and due to the selling pressure in few companies, the upside is also being kept. One more data setup that FI's long short ratio is near to 15 to 17%. And historically, this ratio moves in between 13, 14 to 78 levels. And whenever it comes lower, market takes the U-turn. Whenever it goes higher, market turns lower. So earlier, when Nifty was near to 18,887, the ratio was near to 75, 78%, and the market somehow reacted lower. So I believe all these data setup indicate the overall undertone is positive to range-bound bias in the Indian market. And if you talk for right now, I believe that 17,650 could act as a support and hold of 17,777 could open the upside move to us 18,018 to 18,081 levels in the Nifty index.
Well, so those are the levels to watch out for. 17,650 is a good support level for the Nifty. Let's also get in some of your views on specific stocks. Then Hero Moto, well, that company reported its earnings yesterday. Profit grew just about 4% on a YOY basis. And it was a weak operating performance that impacted the quarterly numbers. If you look at the shares, in fact, they are down somewhere around 6% over the last 5 days or so. How would you expect this stock to behave going forward? And how does it stack up vis-a-vis other two-wheelers going forward?
Yeah, so talking about auto, first thing which you asked earlier about RBI policy. So yes, some volatility could be there, but I think the market is likely to hold. And when you talk about the Nifty auto segment, selective stocks are doing well. Especially we have positive view on counter like Ashok Leyland, TVS Motor, which has bottomed out and betas are comparatively lower. So stability could be there. However, if you talk about the Hero Moto or other names, so these stocks have seen some recovery from the lower levels, but again, follow-up is totally missing. Even in the last trading session, the stock has corrected sharply from higher level. So I think one need to look at the support near to 25.50, 25.80. And that could be a good level to add the stocks for some range-bound bias in the market.
All right, the next one on my list is Airtel. Profits have dropped over 25% on a QOQ basis on provisions for license fee. But the average revenue per user has increased by 3 rupees on a quarter-on-quarter basis. Revenues have also grown 3.7% and EBITDA has also increased by nearly 5% on a QOQ basis. Looking at the stock, it was down about 0.5% in yesterday's session, but over the last 5 days, it is up somewhere around 2% or thereabouts. How would you, what would you say the charts are saying for Bharti Airtel, given the fact that we did see some bit of pressure coming in recently after a report by JP Morgan said that tariff hikes could be ruled out for this year. What are the charts saying for Bharti Airtel?
Yeah, so looking at Bharti, this is one of the counter which remained resilient most of the time. However, in last 4-5 days, we have seen some recovery from the lower levels. So I believe that 770 could act as a support, and somehow call writing is there at 800, but stock has potential to bounce toward 810. So 770 to 810 could be the trading zone for the stock to play.
Right. Getting in the next stock on my list is Adani Green. We all know that Adani stocks have been battered out of shape. For Adani Green, the company reported a 110% jump in its profit despite a weak operating performance. Over the last 5 days itself, the counter has lost 30% or thereabouts. Would you advise investors to buy into this counter at these levels, or is it best to avoid these stocks at the current juncture?
Yeah, so like talking about Adani Greens and other name, I would suggest to let the stability get, let the volatility cool down and let these stocks get stability. So however, the stock has corrected and the overall trend is negative, but most of these stocks are in oversold territory. So I'll wait and watch. I'll wait for stability to happen. Then only I'll comment on the name.
Well, wait and watch is the call on Adani Group of stocks, including Adani Green. The next stock on my list is Rail Vikas Nigam. It has emerged as the lowest bidder for Northwestern Railway project worth 69 crore rupees. The letter of award, however, is still awaited. If you look at the shares, it was under pressure. In fact, it has lost somewhere around 9% or thereabouts in the last 5 days. What would you advise investors to do on this counter?
So like if you look at RVNL, Rail Vikas Nigam Limited, the stock has been consolidating. However, some profit booking was seen from higher levels, but that is not measured. That is also because of some market selling pressure. If I look at the technical setup, the stock is holding well to its 50-day exponential moving average. Recently, it has drifted from higher levels, from 81.75 to all the way to 70 zone. So I believe 68 could provide as a support led by hold of moving average, and then slow and steady we can again see 77, 79 kind of level in RBI.
77 to 79 kind of levels to watch out for on RVNL. The next stock on my list is Thermax. It has reported a steady set of numbers. Profits have jumped nearly 60% on a YOY basis, and revenues have also grown in excess of 25% or thereabouts. The stock was fairly buoyant in yesterday's session. It's above that 2,000 rupee mark, even though it's quite a bit off its 52-week high. What would you suggest investors do for this counter?
Yeah, so if you look at the Thermax comparatively, the stock is bottoming out after the weakness of last 5 weeks. After the weakness of last 5 months, even if you look at the last few days, the stock is finding some stability. In the end of December, the stock made bottom near to 1830. 4, 5, 6 days back, it made bottom near to 1870. So higher base is being formed, and now it is giving a consolidation breakout to last 29, 30 trading session with surpassing of key moving average. So I think one can buy this stock with support of 1950. We are expecting a bounce towards 2100 level in Thermax.
Right, so those are the levels to watch out for on Thermax. With that, let's also look at some of the queries that have been trickling in this morning, and there are quite a few. The first one is on Tata Steel, and it's coming in from Arun. He wants to know whether he should accumulate Tata Steel at current levels for the long term. Now, the numbers are pretty weakish, with European business being the main culprit behind the weakish set of numbers in the third quarter. How would you say the charts are looking now going forward for this counter, Tata Steel?
Yeah, so talking about Tata Steel, we have seen some selling pressure in most of the metal name, and Tata Steel also corrected from higher levels. However, on the weekly chart, we have lost around 7% in last few days. So metal, which were witnessing some outperformance, started to witness some buying zone. And overall, if you look, the Tata Steel has been moving in a channel, and recently it has taken support at the upper band of the rising channel. But I think in this decline, it can find support near to 107 with hurdle of around 115 to 117 marks.
Right, 115 to 117 is the level to watch out for on Tata Steel. The next query is on JK Paper. Funny PG has written in, and he wants to know whether he should be looking at buying into this counter at current levels. The company reported its earnings recently, and they weren't all that bad. Given the fact that the earnings are also out of the way, how should one look at JK Paper going forward?
Actually, I'm quite positive on the stock, but it got stuck in a range from last 4-5 months. Let it hold beyond 425 marks, then the first leg of release would be seen towards 500 level. So it has been consolidated in a range from quite long time. I think let it sustain above 425, then look for a movement of 15 to 25% on higher side in JKP.
Right. So those are the levels to watch out for on JK paper. The next query is on Deepak Nitrite. Parth Chaudhary has written in and he wants to know your views on this counter. The stock was under pressure yesterday. It has lost somewhere around 6 to 7% over the last 5 days. Would you suggest buying this counter at current levels?
So I'll avoid Deepak Nitrite because the major trend of the stock is negative. It is continuously making lower top, lower bottom from last 4 months. Even in the last year, we have seen decline. Even in last 1 month, we have seen correction. The stock has gone to the key support zone. However, it's in oversold, but trend and setup is weak. Even in between, whenever we witness bounce, that bounce was being sold. Yesterday, we have seen huge trading volume. But I think till it doesn't surpass 1815, 1825, the structure could remain weak. Even if bounce happens, it would be tough to hold those bounce. So I'll avoid on Deepak Nitrite. Let the stock get some stability from current.
Avoid Deepak Nitrite at current levels. Hope that answers your query. The next query that is coming in is on NHPC. The company reported its numbers recently. Mohit Anand Bhatia has written in and he wants to know whether this is the right time to buy into the counter.
Yeah. So talking about NHPC, this stock got stuck in a range from last 3-4 months. In the month of October 2022, the stock rallied to 46.90, and then it has been consolidating in between 36 to 45 zone. 5 days back, the high was near to 44, back to 40 zone. So I think it's more on the consolidative nature. One can accumulate on dips near to support of 37 to play the bounce of 44. So 37 to 44 could be the probable trading range, and maybe the buy on decline stance at the lower band of the trading zone.
So buy on declines is a strategy that Chandan is recommending on NHPC. The next query comes in from Prabhu and he wants to know your views on IEX. Now the stock has literally halved from its 52-week high. In fact, it has been in a steady downtrend over the last 6 months or thereabouts. It has lost somewhere around 16% on the counter. What would you advise investors to do on this one?
Yeah, so IEX is now got stuck in a range. Major trend has totally changed. The stock is making higher, lower top, lower bottom. Even in the last year, it corrected sharply. And from last couple of weeks and months also, it got stuck in a range. However, the good part is now selling pressure is not visible, but the concern is the bounce is also not visible. So let it surpass about 150, then only I'll turn positive. Otherwise, I'll be on sideline in the counter with support near to 131 levels.
Right. The next query is coming in from Mohit Chand and he wants to know your views on HDFC Life. He holds 400 shares at the rate of 498 rupees a share. He's making marginal losses on the counter. It is off quite a bit from its 52-week highs of 620 levels or thereabouts. Would you advise him to exit or should he hold on to it?
See, we are not much comfortable in HDFC Life, and after this budget updates, as there was some taxation part in insurance premium of more than 5 lakh. So that kind of things have gone for the negative reaction. So we have done the call writing, initiated some bear put spread. So that is the structure and the trading setup. If I look at the monthly chart, the stock has given a breakdown and trading near to the lowest level of last 32 months. So there are 2 things he can do. If he is totally looking for the long term, then he has to wait. That is the only option. But if it is taken for trading, then better to exit on any bounce near to 550 levels.
Well, exit at those levels that Chandan just mentioned. Hope this answers your query. The next one is coming in from Abu Bakr and he wants to know your views on SRF. Now, this stock has lost somewhere around 11% or thereabouts over the last 6 months. What are the charts suggesting on this one, Chandan? SRF.
So if I look at the SRF and most of the chemical name, here the trend has totally changed and selling pressure is clearly visible on any bounce back move. However, Tata Chemical is one name in the chemical basket, so that is bottomed out, but other names are continuously witnessing some pressure. However, SRF has witnessed good recovery in the last week from all the way to 2082 to 20 to 50 marks, but has been consolidating from last 6-7 trading session. So it is going to be a very conditional trade setup. Only buy about 2250 with support of 2180. And if holds about 2250, then you can see a good short covering towards 2400 levels in the counter.
Right. The next query is on Reliance Industries. Gopi Krishna has written in and he wants to know your view on this stock. Over the last 1 month, the stock has given up somewhere around 10% or thereabouts, and it has been in a downtrend in the last 5 days as well. How would you look at Reliance Industries? What are the kind of levels that one should watch out for on this counter?
So Reliance again come to a key level. If you look at the price setup from last 8 trading session, it has been taking support near to 2300 zone and totally gone stuck in a range, small trading band. Even if you look at the trading range of the yesterday, it was moving in a 1% range. Even prior to that, it was moving in a 0.75% range. So somehow it has gone to the key level and Reliance is going to decide the trend setup of the market. However, the weekly chart is negative because it is continuously making lower top, lower bottom formation from last 9 weeks. So if it holds below 2300, then it opens the downside of 3 to 4%. And if it goes about 2345, 30, 2350, then only the bottom out could be seen. So if you have to buy, only buy about 2345 and hold off 2300, suggests to hedge your position as the stock can correct by further 50 to 80 points from that zone.
All right, buy above 2345 levels. That's the view from Chandan. The next query is coming in on Bajaj Finance. Chandan, Atul Singh has written in and he wants to know what he should do with this counter. This stock has been among the nifty gainers over the last few days. Do you expect the upside trend to continue?
Yeah, so I believe this stock has bottomed out because in last few months it has corrected sharply from higher levels. Bajaj Finance has corrected from 77, 78 to all the way to 56, 45 levels. But now on weekly and daily chart, some bottom formation is clearly visible, followed by some bullish engulfing and the bullish divergence at the bottom. So I believe with support of 6,000, the stock can head to a 6350 to 6500 level. So I think now there is some time for the reversal in the Bajaj Finance after the weakness of last 4 months.
Right. The next query is coming in from the IT pack. It's on HCL Tech. Manish Khedkar has written in and he wants to know your views on this counter. Now, with earnings out of the way, most of these IT firms have reported okay set of numbers given the kind of downbeat global environment that they're operating in. So what would your views be on some of these IT names, especially HCL Tech going forward?
Yeah, so if I talk about Nifty IT has been consolidating, got stuck at the higher bid. And if I talk about HCL Tech, it has seen good movement in last a couple of weeks, but in last 2 days it got stuck. But so major trend is positive. I think the recent decline could be bought. Let it correct to us 1110, then one can grab with support of 1075 or rally to us 1165, 1180 kind of level. So let it correct and then we can look for some positive to range bound strengths in the counter.
So let it correct and then you can maybe look at buying into this counter. The next query is coming in on Asian Paints. Bapi Mandal has written in and he wants to know your views on this counter. The numbers weren't all that colorful. It was below estimates, and over the last 1 month the counter has in fact lost somewhere around 8% or so. Would you recommend some of these paint counters to any of our investors? Berger Paints, Asian Paints, which of these look attractive at this juncture?
So I'll wait for some stability because I remember that from 2012 onwards, every year till 2021, this stock has delivered the positive gain on year-on-year basis. But in the last year, it witnessed profit booking deadline. Even in the last month, it corrected from 3100 to all the way to 2700 level. So some sort of profit booking is there, and that may be because of the crude and other thing. So I'll wait for some stability. As of now, I'll wait for multiple support near to 2695 for any kind of position in the counter.
Right. The last query for the day is coming in from Vishwanath Reddy and he wants to know your views on BLS International. Now, this stock was fairly buoyant in yesterday's session, was up somewhere around 4% or thereabouts, and it has come out with its numbers, if I'm not mistaken, very recently. How would you see this counter doing going forward? In the last 6 months, it has in fact gained somewhere around 60% or thereabouts. Would you suggest buying into this counter now?
So like already we have seen good run up. So this mid cap could be in focus. Those who are holding can continue to be with trailing support. The stock is respecting to his key support trend line. So one can continue to be. If any decline happens, then he can also add participation in that.
So buy and declines is the call on BLS International. Well, this wraps up the query segment. But before I let you go, Chandan, leave us with some of your stock recommendations for viewers.
Yeah, so I'll talk about capital goods name first, starting with Siemens. This stock has given a consolidation breakout, trading at the lifetime high territory. The stock has recently taken support at its key 50-day exponential moving average with recent highest daily close. Major trend is positive. Consolidation breakout on weekly and daily is also its value. So with support of 3065, one can look for a rally towards 3200 plus in Siemens. Apart from that, Tata Chemical looks good. The stock has seen good recovery, consolidation breakout of last 30 trading session with decisive hold of 50-day exponential moving average and surpassing 1008 is the momentum. So with support of 1000, one can look for a move towards 1080 to 1090. Apart from that, Bajaj Finance is other name which has bottomed out. ABB one can look as the stock has given a consolidation breakout with rounding formations. So with support of near to 2950, one can see a rally towards 3150. So Siemens, ABB, Tata Chemical, and Bajaj Finance are the couple of names which could be in focus for long side in this positive to range bound scenario of the broader market.
Well, so Siemens, Tata Chemicals, ABB and Bajaj Finance are some of the stock recommendations from Chandan. Well, with that, Chandan, thanks a lot for taking out time this morning and addressing all our viewer queries. We look forward to having you on the show next time as well. Well, with that, it's a wrap on this edition of Morning Trade. Coming up next is Opening Bell, but don't forget to tune in at 10 a.m. with the Governor's speech. Remember, it's the RBI policy day today, and we will be getting you live coverage on the policy decisions. So stay tuned to Moneycontrol.